All right, quick question. Have you ever seen Bitcoin pumping, but something felt off? Or price dumping and Twitter screaming, shorts are dead, but nothing makes sense? Yeah, that's where open interest comes in. Today, we're breaking down what open interest actually is, why traders obsess over it, and how it can quietly tell you when new money enters or smart money exits the market. No math degree required, no boring textbook vibes, just real usable trading knowledge. And real quick, this is not financial advice. This is pure education. Always do your own research and don't trade with rent money unless you enjoy stress-induced hair loss. Let's cook. So, what is open interest? Open interest, or OI, is simply the total number of futures or options contracts that are currently open and not settled. That's it. Think of it like this. Imagine a poker table. Open interest is how many hands are still being played, not how many chips moved around. If traders open new positions, OI goes up. If traders close positions, OI goes down. It tells us how many traders are currently involved, how much capital is actively at risk, whether attention is growing or fading. Important, OI does not tell you direction. It tells you participation. Let's break it down like you're explaining it to a friend at Starbucks. Scenario 1. No contracts exist. Trader A opens a long. Trader B opens a short. Open interest equals yuan. Scenario 2. Another trader joins and opens a new position. Open interest equals to Scenario 3. Two traders close their positions. Open interest drops. Now here's the key rule most people mess up. If one trader opens and another trader closes, OI does not change. That's why OI is not the same as volume. Volume equals activity, open interest equals commitment. Real-world use, futures, BTC, ETH, ALTs, options, calls, and puts. Perpetual contracts. OI shows where traders are stuck, confident, or over-leveraged. Let's talk money flow. Open interest reflects capital deployment. Rising OI equals new money, entering falling OI equals money leaving or getting liquidated. Why demand matters. High OI equals better liquidity. Better liquidity equals smoother entries and exits. Low OI, thin books, wild wicks. This is why big traders watch OI exchanges highlight OI. Liquidation cascades happen when OI is stacked one way. OI is basically leverage pressure in numeric form. Here's where open interest becomes interesting. Price up plus OI up. Trend supported by new money. Usually healthier move, price up plus OI down. Short covering rally, can fade fast. Price down plus OI up. New shorts entering. Potential squeeze zone. Price down plus OI down. Traders leaving. Trend exhaustion. Narratives, bull markets equals rising. OI plus rising volume, chop markets equals flat, OI. Tops often happen with extreme OI catalysts that spike OI. ETF news CPI/FOMC. Exchange listings. Meme hype cycles. OI tells you when the crowd shows up, and crowds usually get punished eventually. Strengths. Shows real market participation, helps spot leverage buildup. Great with funding rates and volume. Identifies squeeze potential risks. Doesn't show direction, can stay elevated longer than expected. Needs context, price plus volume. Retail misreads it constantly, compared to indicators like RSI or MACD. OI shows positioning, indicators show price behavior. Best combo? Price plus volume plus open interest plus funding. Traders, perfect for futures, leverage, scalp, and swing setups. Holders, helps identify overheated markets in local tops. Builders, ni. Analysts, great for understanding market structure and participation. Risk profile, low risk info, high value insight, but misuse equals bad trades. Let's recap real quick. Open interest equal open contracts rising. OI equals new money, falling OI equals money leaving. It doesn't predict price. It explains behavior. If you enjoyed this breakdown, smash that. Drop a comment if you want more market structure content, and subscribe for weekly crypto education without the nonsense. Check the exchange links below if you're trading. And as always, DYOR, stay safe. Don't over-leverage. I'll see you in the next one.